Good morning. Welcome to Trading Hour. It's a Friday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormis. And it's a weak start to wrap up this week. Benchmark indices are down close to about 0.7%, snapping a 6-day winning streak. The Nifty is at that 24,900 mark. Yesterday, the resistance we faced was around 25,150. Today, we opened up like a little subdued, but the selling pressure has picked up as the morning has progressed. The Midcap index, which was up in the green, has now dipped into the red. So it's got a red tick right now. The Midcap index down close to about 0.5%. And the advanced decline ratio is also weak, about 2 stocks advancing for 3 in the red. Stocks which are under pressure, well, banks right on top. The Nifty banking index is down close to about 500 points, but you've got softness coming in FMCG. IT too is a bit of a drag. So lots of these heavyweights are under pressure. What's bucking the trend? Well, not too much, but you've got green on the screen when it comes to BEL. But this is after the stock correcting over the last couple of days. M&M is higher. IndusInd Bank is up and about. Sun Pharma has a green tick going for itself. But all in all, it's been a weak start to the trading session today. Hormis has now moved over to the big wall, and he's going to tell us about all the stocks that are moving and shaking at 11 o'clock.
Well, there are some names that are bucking the trend, though. Although can't deny the fact that there is a weak start indeed. And the underlying theme, mostly defense and defense-related names. But starting off with R Systems International, of course, the stock being in news because of the acquisition that it announced. 11.5% higher, the biggest single-day gain since November of 22. But look at the volumes here. In fact, not only in R Systems, but all the names that we're going to highlight in over the next minute or so. R Systems, 70 lakh shares changing hands already compared to a 20-day average of just 30,000. And as a result of this move, the stock has turned positive for the year, and it after having a negative year in 2024. Excuse me. The other one is, of course, DCX Systems, and this is the defense-related names that I was talking about. 10% higher on this stock as well. The biggest single-day gain that the stock has seen since May, and over 1 crore shares have changed hands already compared to a 20-day average of just 2 lakh. And with this move, the stock is now trading close to its 100-day moving average, which is close to 280 rupees. But despite this move, the stock is still down 20% so far on a year-to-date basis. The other defense-related name is Apollo Micro. It announced an order win last evening. The biggest single-day gain the stock has seen since January of this year, and has gained every single day this week so far. And this 11% move comes on the back of more than 2 crore shares that have changed hands in the first couple of hours of the trading session compared to a 20-day average of just 22 lakh shares. And courtesy of this move, the stock has nearly doubled in 2025 so far, taking its year-to-date gains to almost 98% now. And the last one on the list is Godavari Power, and this one has, of course, gained every single day this week as well, but has gained in 8 out of the last 9 trading sessions. And the overall volumes, though, have been on a decline. Although today's volumes too are higher than the 20-day average, but their overall volumes are on a decline for the 3rd straight day. And this move also, although the stock is off the day's high now, but it turned positive for 2025 after this recent up move. And the stock had ended 2020 at 11 rupees, and since then it made a high of 253 in December of 2024. So a lot of stocks that are bucking the trend, but the underlying takeaway is that all of these are buzzing on really, really high volumes.
Got that. Thank you very much for that. The Nifty index rejig is also likely to take place today. We spoke about it yesterday, but not just that, even the FTSE rebalancing is on the card. Vivek is joining in with the details.
Important day as far as passive indices are concerned. Both the NSE as well as FTSE will go ahead and announce the changes as far as the respective indices are concerned. Remember, yesterday we had highlighted about the likely inclusion and exclusion candidates of the Nifty 50. Reiterating that, Nifty 50, you could see 2 new entrants. Max Healthcare and Indigo are the likely inclusion candidates. Max Healthcare could see inflows of close to $400 million, while Indigo could see inflows of close to $600 million. The 2 constituents that could make the way for these 2 names are IndusInd Bank and Hero Motor. IndusInd Bank could see outflows of close to $230 million, while Hero Motor could see outflows of close to $300 million. Now coming to FTSE, the key index that we track here is the FTSE All World Index. Quite a few stocks are expected to make their entrance into the FTSE All World Index. The names are Cohance, JK Cement, expect to see inflows of close to $75 million, Chola Finance, Hexaware, KPR Mill, Narayana Hrudayalaya, Autumn Investment, Godfrey Phillips, as well as MCX. Remember, MCX could see inflows of close to $58 million. These estimates, these inclusion candidates are broker estimates, and it'll be interesting to see which are the names that make the cut in this particular index reval event.
Vivek, thank you for that update and some interesting names that you need to keep an eye out for on this potential Nifty rejig and the FTSE All World Index rejig as well. You know, two names that were on the downside yesterday, of course, dominated proceedings in the second half of the trading session. One was BSE, the other one was Angel One, and of course, that was after the statements made by the SEBI chairperson. BSE, no significant moves in today's session. Same for Angel One as well. Both the stocks were down 8% in yesterday's trade. But how do both of these names stack up on the valuation front? Vamakshi is here with an analysis of that. Vamakshi.
Well, Hormaz, all of these capital market stocks have been in focus not just yesterday or, the day before, but in fact for the last couple of quarters. SEBI has been tightening the nose on F&O, and it continues to do so. There could be some potential curbing in terms of, speculative activity as well. Given those developments, we did see a correction come in on most of the capital market stocks. Of course, BSE is up almost 29% on a year-to-date basis, but take a look at Angel One as well as 361 WAM. Both of these counters have declined by almost 16% year to date. Motilal Oswal too is trading with a cut of almost 2.5%. But despite this sort of correction, the valuations for most of these counters still remain above the 5-year average. Take a look at BSE. The 1-year forward PE is at almost 44 times, which is higher as compared to 33 times, which is the 5-year average price to earnings ratio. The same goes for Motilal Oswal as well as 361 WAM. Angel One, on the other hand, stands out because the 1-year forward PE multiple is actually lower as compared to the 5-year average. Now, keep in mind that, given the kind of story that we had yesterday, there is a note that came in from UBS, and they say that, SEBI's plan to raise tenure for derivatives, they're commenting on that, and they say if the weekly expiries are removed, BSE's profitability could be impacted. In fact, they also did a scenario analysis in which they say that every 10% drop in options premium average daily turnover can actually impact 6% of the company's profitability. So, the valuations are not as cheap, and, the note coming in from UBS on BSE as well. And given that, both of these counters on our radar today.
Thank you for that. Get into a break. On the other side, we'll put the focus on crypto market. Manisha Gupta will join in on the other side.
Powered by Coin DCX.
On Crypto Corner today, we are talking about crypto ETFs. Well, this is a market that continues to grow very, very strong since its inception in Jan 2024. Therein, in the first year itself, we did see $36 billion of inflows coming into this one. And currently, the crypto ETF overall market cap stands at a tall $173.5 billion there. Well, it has been a very strong ETF growth there. The markets also are looking at the fastest that ETFs have seen in sense of growth in the traditional asset classes. The crypto ETFs have given you that kind of returns and that kind of money inflows as well. So when you look at the overall broader markets, well, it has to see with the support coming in from US regulations. The US Stable Genius Coin Act passed in the last month itself clearly has been supportive. We've also seen Clarity Act being signed by both houses. So that is something the street is looking at. Also, there is a vote on broader crypto structure bill in US that is anticipated by the end of September. Markets are looking and watching that very, very keenly. And it's not so much about retail participation right now. It is to do with institutions, fund houses that have seen buying come into this one. The SEC also is expected to approve staking of spot Ether ETF going forward. So there are more developments coming in for this one. The street is also looking at more ETFs being launched, not just in US, but other countries as well. And as I told you, there is strong demand from corporates and publicly traded firms which are increasing their holdings in case of crypto. It is about reservations that we are looking at coming in sense of holding this. I'll start with the major cryptocurrencies here where you have seen ETFs. Bitcoin is the first one, and Bitcoin ETF was one of the most successfully ETF launched in history. The total market capitalization of Bitcoin ETF stands at a very tall $150 billion there. Within this as well, iShares Bitcoin Trust ETF, which is also known as IBIT, stands at a market capital of $85.65 billion there. There are more ETFs now coming into the history. We are also looking at 3 more ETFs getting launched there. The total market capitalization of Ethereum ETFs in the meanwhile stands at a $22.55 billion. Largest Ethereum ETF in this space is iShares Ethereum Trust ETF, and ETH's market capital at this point in time stands at a $15.43 billion. And Ethereum ETF, by the way, in the last couple of months has seen more inflows than what Bitcoin ETFs have seen. So very strong going when it comes to Bitcoin and Ethereum. But as I said, there are more ETFs being launched as well, not in US yet, but other countries. Solana ETF is one by like that. Approvals from the US are yet to come, but it already has been launched in Canada and is trading in Europe as well. And then there are various applications right now lying with the US SEC. XRP, Hedera, Litecoin are some of the other blockchains and cryptocurrencies which are looking to launch their own ETFs. There also are applications submitted right now for hybrid Bitcoins and Ether Fund, something that the streets are waiting for. But with that, that's all the time that we have on Crypto Corner. There's a break coming in, and on the other side, we'll continue with updates and news.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. 24,900 is exactly where the index currently stands, 170 points lower, 180 points lower now, in fact, at the lowest point of the day, continuing to defend those levels, or at least trying to. Of course, there is no taking away from the fact that there will be a second straight weekly advance, because the Nifty has to close below 24,631 to have a weekly loss. So we are comfortably above the weekly gain threshold. But of course, this does sour a bit of sentiment after that 6-day up move that we have seen. But the stock that we are putting the spotlight on in today's big story is Wipro. Now, you remember there was an acquisition announced by Infosys just a few days prior, and now Wipro announced an acquisition yesterday as a digital transformation solutions unit. But the stock is still under pressure. Rima, the acquisition seems to be fairly okay, but what's causing this stock to be under pressure? It's not like its stock has run up too much.
Well, earlier this week, most of the IT stocks were higher. But the reason is the acquired company, DTS, it's called Digital Transformation Solutions, has had flat revenue growth for 3 years in a row. Calendar year 2022 to calendar year 2024, revenues are unchanged at $315 million. That's reason number one. Secondly, the acquired company also has perceived lower margins. Throw that in with the integration costs, because there are so many people on site where the wages are higher. They're not staffed in India. So the company is saying that the margins of Wipro could be impacted negatively by 50 basis points on the back of this acquisition. That's reason number two. And third is HSBC says the valuation gap between Wipro, because historically it used to trade at a discount, right, versus peers is at a historic low. And look at the 1-year return of Wipro. I mean, the entire IT pack is down, but Wipro is down 5%, less than, some of the peers. So the acquisition actually is a good acquisition. It bolsters their capabilities, very opportunistic buy. It's ticking all the right boxes, but these are some reasons why the stock is weak.
And multiple reasons, Rima. But so do we perceive that in this demand, and there's no taking away from the fact that the demand environment is weak, but does this mean that we saw one earlier, we've seen one now from Wipro, but do we anticipate more such deals to take place? Because now you would feel like, okay, demand may be weak, so let's at least aim for growth, is what you had earlier mentioned as well, looking for growth. So more acquisitions like this in the future?
I think so, because growth has been absent now for second or third year in a row. Even this year, look at Infi's guidance. It's 1 to 3%, right? There is no growth. So companies are looking at ways to bolster their growth. Now, this is what Wipro's acquisition does. They're saying in the first year, because it'll close in December, so you'll hardly get, 1 quarter benefit. It can add 0.8%. Next year, you will have 3 quarters of incremental revenues that can add 2.1%. But in a nutshell, about 3% once it's it's fully integrated is the revenue contribution of this acquisition. Also, Wipro, when we spoke to them in July, post the Q1 numbers, very categorically, we asked them about growth versus margins, right? He said growth will be our number one priority. And it's not just Wipro, right, which has made this acquisition. Look at Infosys. I think just in August, they had acquired an Australian IT company for about $150 million to expand their cloud solution offerings. Prior to that, they acquired Missing Link, they had acquired MRE Consulting, which basically is in the energy consulting space. But in a nutshell, you are seeing companies looking to up the growth now because growth is missing otherwise.
Indeed. So now looking at inorganic ways now to bolster their growth prospects. So this acquisition, of course, is looking to strengthen Wipro's ER&D capabilities. But why ER&D? Is it their? It's not their largest vertical, right? Is it?
No, it's not their largest vertical. But ER&D compared to the traditional IT services companies is higher growth. That's reason number one. Two, ER&D companies are very strong in, say, automotive, right? You want to transition from ICE to EV. You want to transition to autonomous vehicles. You want to focus on, in the aerospace. These are companies heavily in the ER&D companies that their clients are heavily investing in technology so that they could upgrade themselves. So which is why here tech spends continue to remain higher. Traditional IT services are getting commoditized, especially with generative AI. It is in a way seen deflationary. ER&D deals are higher value in nature, right? Imagine an auto company, you want to move to EV, you want to move to the autonomous platform, you want to make sure that your car has all the software that it needs. It's a software on wheels. You will need to make those spends. So generally, ER&D spends have been higher. The companies have been higher growth. Also, there is a cross-sell opportunity. For instance, Wipro, because the acquired company has a Samsung, it's ultimately a unit of Samsung, right? You can cross-sell to Samsung. It opens out South Korea as a market for them. And also, many of these companies, right, they have delivery centers globally. So you have access to talent. So Wipro will take on board about 5,600 people on the back of this acquisition. And I just want to quickly leave with you with one plate about how your traditional IT services companies, the large ones, have been making ER&D acquisitions too, right? Wipro, this, DTS, the Harman Connected Services, Cognizant spent about $1.3 billion to acquire Belcan last year. Infosys acquired Intech. HCL Tech acquired in July of 2023, so 2 years back. So companies have been upping their ER&D exposure.
So the ER&Ds is the persistence and the Tata Alexis of the kind, right?
The KPITs
of the kind, indeed.
So right now they're going through a tough phase, right? Compared to the high growth area, which is why even a KPIT Tech is not growing as much, or L&T. That said, still KPIT's growth is higher than some of the peers. It's just that on a very high base, things are slowing down. But at some point, once the situation improves, macro, the expectation is ER&D tech spends will come back. It's just a cyclical.
And once you get used to the higher growth levels, you can't necessarily digest the mid-teens or the
And things are slow, right? There is a lot of uncertainty. So things are slow, but the expectation is that it will pick up at some point.
At some point, yeah. Sooner or later is that the hope, right? And well, indeed. So Wipro is the big story of the day. And as Reema was highlighting the key factors and why the deal is advantageous for the company, the stock has recovered slightly from the lows of the day, still though 0.3% lower, and it's traded in a very narrow band as of today's trading session. So that's the big story of the day. Wipro, the acquisition that it announced, and brokerages too mostly have a positive read-through for Wipro. Get you a quick chart check now, considering the fact that the Nifty is still looking to find support at that 24,900 mark. Aditya Agarwala from Invest for Edu is joining in. Aditya, good morning. Thank you for joining in. Well, 24,900 key support for the Nifty. Do you believe that this sustains today? And if not, does that bring back the 20 DMA into play on the downside?
Morning, Hormus. Thanks for having me on the show. Yes, absolutely. In fact, my sense is markets should find support close to about 24,900, 24, at max maybe 850 on the downside, and could be we could be in for a short covering rally as well towards the fag end of the trading session, which is in some time now. I don't see too much of a profit taking from here on. In fact, if anything, I would stick my neck out and maybe go in for a long trade at current levels. Look for a stop loss around 24,850 on the downside, And we could see the levels of 25,000 thereabouts again towards the end of the trading session. My sense is markets could close somewhere between 24,950 to about 25,000 on the upside in trade today. And Bank Nifty, while it has shown a lot of weakness in trade today, what is interesting is almost it has covered up the gap area which we had seen at the start of the week. And my sense is from here on, with a good support on the downside at 55,200, 55,150, Bank Nifty too could see a bit of a pullback in late trade today. Could be to levels of 55,600 to about 55,700 on the upside. So overall, I'm not too perturbed by this kind of a profit taking that we're witnessing both on the Nifty and the Bank Nifty. If anything, I would stick my neck out and try and take a long position with a small stop loss around 24,850 on the downside on the Nifty.
What about stocks, Aditya?
So a couple of stocks I have on my buy recommendation clearly because there are pockets which are buzzing, Rima, and one of them is from the consumer durable space. Godrej Consumer Products looks very interesting. So Godrej CP is a buy after a good consolidation. Stock has broken out on good volumes, continuously making higher highs, higher lows. So for a target of 1350 on the upside, I'll be a buyer here with a stop loss at 1200 on the downside. And Siemens is the second stock which is looking interesting to me. Also, again, has broken out of a narrow consolidation phase, good volume action also witnessed here. So for a target of 3450 on the upside with a stop loss at 3100 on the downside, I'll be a buyer in Siemens as well.
Aditya, thank you for sparing time joining us today with your views on the index and on specific stocks as well. By the way, just before we go to Sudarshan, pull up Z Entertainment. That stock is extending its gains now, 5% higher on that stock. And the other one that has also moved higher is Swan Energy. That too has now seen gains of around 6% as we speak. So some of the stocks that are bucking the trend, and this move in Swan Energy has just come in the last 30 minutes. Take a look at that. The stock was absolutely flat, trading below the flat line, and now has seen that very sharp spike at 6% higher on Swan Energy. But it's a snap to the 6-day winning streak. But is there hope that the second half will bring about a reversal and we might just end up seeing a 7th straight day of gains? Sudarshan is here to tell you all the trends from what the FNO data is indicating. Sudarshan, tell us more.
So the hope is that the data indicates there is not much panic, and Nifty is trying everything to hold on to levels above 24,900. So over the last few days, one stock that was supporting Nifty, that has also fallen today, that is Reliance Industries. Financials remain weak. Even IT has turned a bit on the weak side, and that's the reason you are seeing a fall in the Nifty. Nifty has just fallen below 25,000, but we'll have to see if Nifty manages to hold on to levels above 24,900, because it's very important support. If Nifty breaches 24,900, the next support comes in the range of 24,800 to 24,850. As far as volatility index is concerned, it's just up 2%, so there is not much indication from there also. Put call ratio 0.79 versus previous day level of 1.12. Option data. So we are seeing a huge call option writing at the level of 25,100 and 25,000. So it indicates you that call writers are not seeing Nifty to move above the level of 25,100 in the near term. As far as the put options are concerned, 24,900 and 24,800 on the downside. For now, it remains protected. Now, support for Nifty, again, as I told you, 24,900 remains immediate support. Next support comes in the range of 24,800 to 24,850. So keep an eye on that. Resistance for now, 25,015. And if we manage to cross that level, the next resistance level comes around 25,150. Two stocks that I have taken. So after over the last few days, Nestle had moved higher, but today it's seeing fresh shorts. One stock, MCX, yesterday it saw a big fall alongside of other capital market names, but today it's seeing short covering.
Thank you very much for that. Get into break. On the other side, we'll discuss market fundamentals. Nilesh Shetty from Quantum Advisors joins in next. Welcome back. Q1 earnings season has come to an end and CLSA has now compiled some of the stocks where we've seen big upgrades, downgrades, basically earnings changes. Vinny is now joining in. Vinny.
Hi, yes, so we're seeing big changes that they've made CLSA in some of these names, right? Earnings upgrade. First, let's talk about FY26, where the changes, they're expecting better earnings coming in. So first for earnings upgrade, we have Fusion Finance, where they believe the earnings upgrade could come in as much as 384%. That's almost 4 times in terms of their earnings. For HPCL also, they're quite positive, 97% uptick from the previous levels. Now they expect FY26 to have a 97% better earnings for HPCL, as well as BPCL also, an earnings upgrade coming in for 88%. On the flip side, you have downgrades that have come in. Some of the names that is, you have the QSR name that's come in as Devyani International. So they believe there could be an earnings downgrade of 58% in FY26, and others are 2 bank names, IndusInd Bank as well as Bandhan Bank. For FY27, now in terms of upgrades, they believe that Dalmia Bharat, in terms of earnings upgrade, that's an earnings upgrade of 20% for Dalmia Bharat. While in terms of EMS players, they believe Keynes as well as Amber could see a good earnings upgrade and up move as well. And that's why they've upgraded the EPS over there as well by around 14% for Keynes and around 10% for Amber Enterprises. On the downside and flip side for downgrades coming in for earnings for FY27, they believe IndusInd Bank, Bandhan Bank, that could continue to see the downgrade there as well in FY27. And restaurant brand Asia, that's a name that they believe that 14% downside could be seen in terms of their earnings over there. Ratings upgrade that have come in now, they've moved from hold to outperform rating for Phoenix Mills, Eicher Motors as well as Ashok Leyland, and upgraded from underperform to hold rating for Fusion Finance as well as HPCL. Rating downgrades have come in for Nestle from outperform to hold, while from hold to underperform rating downgrade is coming for Paytm as well as Bharti Hexacom. So these are some of the changes that they made post the Q1 numbers of these companies.
Vinny, thank you for that update there from CLSA. Multiple upgrades and some downgrades as well coming in from CLSA. Nilesh Shetty, the portfolio manager at Quantum Advisors, is joining in now to take this conversation forward. Nilesh, good morning. Thank you for joining in. You know, there has been a lot of conversation with regards to the IT companies, and with growth being absent, they have been resorting to inorganic means. We just saw an acquisition from Infosys recently. Wipro announced an acquisition yesterday. Do you believe that inorganic growth might just be the route now for IT companies to take, considering the fact that demand is more or less absent?
It's not that they decided to acquire just in the last 3 months. They've been doing acquisitions for the last many years. The drive to do acquisition is either to fill up a strategic gap in their portfolio, which they think they don't possess, and then someone else can fill that in, or just an opportunity which presents itself at some point in time. So again, I don't think the acquisitions in the near term has also been very different. I think it's been driven by these 2 objectives. Again, the demand environment remains sort of fairly docile at the moment. And it is not that it may not pick up. It is just that in the uncertainty that the world is in the developed world as well as in other markets, no corporate is looking to dramatically up their spend. Once that level of uncertainty comes down, you may see demand pick up again, which is what the commentary that the managements are also seeing. What you have to look at is valuations. A lot of the valuations compared to their own averages, historical averages, is a lot lower. And if you were to buy these companies today and be slightly patient, perhaps the opportunity is a lot better over the next 2 years, rather than wait for the demand to pick up. By then, the stocks may already run up. So at least for us, we continue to have a large allocation to IT services, primarily given that valuations are a lot more reasonable. These companies continue to generate a lot of cash. And as you rightly said, if demand doesn't pick up, they may look at inorganic opportunities. But for us, the bet remains that demand will eventually pick up. There is a point at which a lot of the developed world companies will start doing capex, which they've deferred, and you will see valuations re-rate in that space.
So what percentage of your portfolio, Nilesh, is in IT, and could you tell us the stocks that you like right now in the IT pack?
So we have about 16% of the portfolio in IT services, and we've always preferred the larger names, the big the top 3 or 4 names in the space. Given that scale plays a big role in bagging large contracts. A lot of the smaller IT companies, as they move higher, sometimes flounder, which is not a risk that we prefer to take. And especially given the valuation mismatch, if you go slightly lower in the mid-cap IT space, valuations are almost 2x of the larger names. So our bet remains the larger IT cap names.
Interestingly, Nilesh, I was reading Walmart's results yesterday, and the one major takeaway that came about was the fact that its e-commerce division turned profitable in this quarter for the first time. Now, this is after almost 25 years since they first began this e-commerce operations, which was back in the year of 2000. Does that give a message out to our quick commerce players as well, or that, okay, their path to profitability might still be some time away, so the street may have to cut them some slack? Or are they so priced to perfection that they do not have that long a window to turn profitable and they need to deliver numbers faster as compared to some of their larger global peers?
Yeah, I think especially when they listed, the valuations were absolutely abnormal. I mean, whatever valuation uh, we were building in terms of cash flow positivity, even then they were trading at exorbitant valuations. Since then, of course, froth has come off a bit, but even today it is quite expensive for us. Again, our style is more value, and a growth manager might have a different outlook. But for us, what is priced into these stocks still remains fairly expensive. I mean, a lot of the global e-commerce companies actually eventually started making profits not from e-commerce. It was either through cloud or either through advertising. And I'm assuming Indian e-commerce companies may have to figure out how they eventually make profit. But the current unit economics doesn't sort of suggest that they'll break even quite rapidly over the next few years. You may have to wait a while for them to become profitable.
So you like large cap IT. You've always seen value in private sector banks. I think I remember that from our last conversation. Where else do you see value in the markets right now, Nilesh?
So, I mean, we are stock specific and we found select opportunities, say in a pharma company, which came within our buy limit where we wanted to add it. We continue to track the logistics space closely, where we think there might be an opportunity which may come through for us to add. But apart from that, the large allocation remains financials, which includes private sector banks as well as insurance companies. And also we have a large allocation to automobiles, which of course we've reduced our allocation there, but it still remains fairly large relative to what other managers hold, which includes two-wheeler names as well as a large tractor and automotive company.
Okay. Can you tell us a little bit about the pharma company that you acquired and the logistics company that you are studying right now?
Yeah, I mean, the companies, especially the pharma company, may have near-term issues, but our sense is a lot of it is already in the price. So the market has sort of punished it more than what we think they should. And that is where, because we have a slightly longer-term horizon, we are looking at companies with a 4-5 year horizon. We think once that near-term issue is over, they might be able to deliver profits, which the markets sort of may re-rate in terms of valuation. And the logistics is a pure play sort of logistics player where they've almost fallen 50% on the peak because of issues of growth in the near term, as well as delay in the DFC coming through. And again, we think if you're a patient investor like us, over the longer term, you may be able to generate decent returns there.
A big talking point over the last couple of days has been these exchange operators and the fact that the SEBI chairperson's remarks yesterday about the potential to increase the tenure of the expiries. What does that do to incremental volumes on these exchanges, be it BSE or then going into the broking community as well, so the Angels and the Motilal Oswals and the likes? Once volumes get impacted, do you believe that the valuations are not pricing in such an impact yet, and you would see a significant reset towards the downside in case such a move becomes a reality?
Yeah, I mean, volumes generally have been far above normal for India for the last 5 years, and trying to price off companies on those volumes may not be correct. I am assuming the regulator was also worried in terms of what was happening, especially with retail participation in FNO. And that they've been trying to sort of reduce that froth for a while, and they have been actually have reduced it materially over the last few months. Again, our sense is to get quality names there was not easy. There was one quality company which got delisted. The parent bank decided to delist at valuations which were not very attractive for shareholders. But apart from that, to get companies where you are more comfortable with governance standards, where you think they may not be doing something on the regulatory side, which may upset the apple cart, and then to get at valuations that are reasonable may not be correct. And when we try to value these companies, our sort of volume growth or volume numbers are a lot lower than where they are today. because we think there is some froth that will get derated in these businesses. And once you do that, suddenly the valuations look a lot more expensive than what they appear at the moment.
Thank you very much for that. We will slip into a break. We'll come back with more on the markets on the other side. Stay tuned.
Welcome back. There's some recovery from the lows of the day, 30 points off at least for the index. 24,930 is where we currently stand. Still 150 points down, but you'll expect that kind of profit taking after a 6-day up move. The stock that we want to talk about right now is Divi's Laboratories, and that is in focus after a note from Citi, and courtesy of which the stock is up 2% currently. And Sudarshan is here to tell us more about what Citi had to say about Divi's, and then we go across to Winnie, who will tell us why our systems is buzzing in today's session. Sudarshan, over to you first.
So Citi maintains buy call on the stock, and target it has given is of 7,750. That is an upside of almost 25% from current levels. It believes the recent weakness that stock had seen is a buying opportunity. Also, valuations it finds reasonable due to sector tailwinds and the order pipeline that company has. It believes that concerns around this orforglipron, that is weight loss drug, appear overdone, and by FY30, total sales are expected to be of more than $15 billion plus. And strong adoption of tirzepatide, that is the obesity drug, and upgrades in product indicate an increase in peptide GLP-1. Also, concerns around Entresto going generic in the US. Citi believes that it might be fading away going forward, and considering all these factors, Citi has given target price of 7,750 versus current level that stock is trading around, that is 6,150.
Got that. Let's talk about our systems then. We have Vinny joining in.
Hi, yes, so our systems today, that is the stock that is buzzing in trade today. They've acquired Novigo Solutions for 400 crores cash consideration. Plus, there's going to be a stock option, stock that is going to come in as well, stock options that will come in based and linked to the EBITDA performance going forward. Now, obviously, this acquisition is positive for our systems. Why? Because this gives them an upper hand in terms of offerings in the Middle East, which is a fast-growing region overall. Other than that, they gain delivery presence in Bangalore and in Tier 2 cities in India. This acquisition is expected to be EPS accretive for our systems from the first year itself. Now look at the numbers for Novigo Solutions, right? For FY25, the revenues was at 264 crores, margins at 25%. EBITDA margins is what I'm talking about. And on a CAGR basis, the CAGR growth for the last 3 years was at 44%. So strong growth there. They have healthy free cash flows as well. While our systems, their EBITDA margins in Q1 or June quarter, when you look at it, was at 17.3%. So clearly, they do have better margins, right, Novigo, versus what our systems is currently at 17.3%. And that is why overall, it's a better deal in terms of margins, also higher margin sort of a business that will come in there for the company. Do not forget, our systems have made a lot of large acquisitions in the last few years, which have worked out well for them. And that is why the street is positive, even on this one.
Okay, by the way, our systems is owned by Blackstone.
Yep.
Blackstone had acquired stake from the promoters in 2023, about 2 years back. At that point, the acquisition price was 246. The market cap was 2,900 crore, and now the market cap is in excess of close to about 5,000 crore rupees. So, I think since the promoter change coming through, Blackstone owns about 52% stake in the company. You've seen that stock. I think a 2-year stock price, perhaps we could get that up. 249 was the 2-year return. If we could, 249, 46 was the price at which Blackstone had bought stake.
Yeah. So in a way, it's almost doubled from those levels. Yeah, so good returns there for our systems over the last 2 years. 12.5% higher in today's trade as well. But in confirmation of a CNBC-TV18 news break that Shilpa had reported earlier about Ritesh Tiwari and his move to the parent company Unilever, that made an official announcement last evening, and Shilpa tells us more about that in this piece. Shilpa.
Well, it is a CNBC-TV18 news break confirmed. We had reported in July that HUL CFO Ritesh Tiwari will be stepping down from his role and will be taking on a global role. And yesterday, the company officially announced a new CFO, Niranjan Gupta, who will be taking a charge from the 1st of September as the CFO designate and formally step into the role from the 1st of November, reporting to the newly appointed MD and CEO, Priya Nair. Meanwhile, Ritesh Tiwari will be moving to London as the new global head of M&A and Treasury and will take on that role from the 1st of November. Now, Niranjan Gupta was formerly the CEO of Hero MotoCorp, a role that he stepped down from as of April 30, 2025. In fact, he is no stranger to HUL. He began his career at the company. He spent about 2 decades in the company across various leadership roles before he moved on to Vedanta and then eventually to Hero MotoCorp. Now, he comes to the company, or rather returns to the company, with extensive experience in M&A, finance, supply chain and strategy. Meanwhile, Ritesh Tiwari will be handing over the reins to him as he relocates to London. And remember, he was the CFO of HUL from 2021. He has been credited with steering the company through the COVID-19 pandemic, driving acquisitions, driving the portfolio reshape, and more recently, the hiving off of the ice cream business into Quality Walls India. Now, the leadership change here with a new CEO and now a new CFO comes at a time where finally the FMCG industry is starting to see green shoots. In fact, in a recent exclusive interview to us, Ritesh Tiwari did say that demand is coming back and that the company expects this momentum to sustain as they will continue to focus on premiumization, especially in the beauty and foods business, to drive growth. Back to you.
Thank you very much for that and congratulations on that news break. CNBC TV18's Shilpa first to report there. Back to Vinny now for Apollo Hospitals. Vinny, promoters sold stake, but with that money, they're looking to bring down their pledge significantly.
Absolutely, that's the main aim, right? And that's why the recovery that we saw coming in the stock for the day and now, as of now, trading in the green, 0.4% of gain. So Sunita Reddy on the exchanges, they informed, Apollo Hospital informed that Sunita Reddy has sold that 18.97 lakh shares. That is 1.3% stake in the company, which we had reported earlier. Now, this is at a price of 7,850 rupees, which is a discount to yesterday's closing price. But the main reason for recovery is because now the promoters will bring down their pledge. Now, the pledge will come down from 13.1% currently to 2% post this stake sale that they've done, and the promoter shareholding overall will come down to 28% from previous 29.3% post this transaction. But the main reason for this was to reduce that pledge, and that is why the recovery in the stock.
Recovery in the stock from the lows of the day into the positive now is the Apollo Hospitals. Vinny, thank you for that. Take a short break. More on the markets on the other side. Stay tuned. Welcome back. Now, speaking at an event in New Delhi, the Chinese ambassador to India said that China stands with the subcontinent and blamed the US for being a bully for using tariffs as a bargaining chip. Listen in.
The United States has long been benefited greatly from free trade, but now it is using tariffs as a bargaining chip to demand exorbitant prices from various countries. The United States has imposed tariffs of up to 50% on India and even threatened for more. China firmly opposes it. In the face of such acts, silence or compromise only emboldens the bully. China will firmly stand with India to uphold the multilateral trading system with the World Trade Organization at its core.
Well, with that, it's a wrap on Trading Hour. Thank you for watching. Don't go anywhere. On the other side is Halftime Report.